Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Thursday morning, August 27th, 2020, and what an amazing trading day yesterday. Market made new all-time highs again. Some of the stocks in our game plan just absolutely crushing it this week. On Monday, we actually called Facebook out as the trade of the week. Kind of set up a little bit last week, and the last 2 days just exploded. If you're in the boot camp right now, you obviously took part in NEO and Netflix yesterday. NEO we've called out here in the videos, but Netflix actually yesterday, we opened up the day saying set alerts for this price level, and once we got at or near that price level, obviously the stock just exploded. We'll take a look at the chart. So the question is now, what is the next price target for Netflix after yesterday? Well, yesterday it expanded a massive amount of buying pressure, and it actually blew through our target. So we're kind of in the middle of, do we let it pause there a little bit? We got the Jackson Hole virtual summit today. What Powell says today is kind of has the market on pause. We're trading a little bit lower in the futures right now, which, by the way, is a question that I get often, is do I use pre-market levels in my real-time trading hours decisions? And the answer is yes, but only if there's significant volume. Because, and I think that's a problem that is not explained enough, is that a certain high or a certain low in a stock, when you're looking at it on whatever time frame chart you happen to be looking on, if 100 shares traded all the way up there and you're using that as a significant reference point, you're doing it wrong. Whether it's pre-market or actual hours, you have to look at the chart and say, what is the real price that volume is trading at and having a hard time getting through? That's the real support or resistance. So if you're using these pre-market levels, just make sure that there's decent volume to have that be on your chart as, okay, traded up there pre-market or traded down there pre-market. I'm going to use that as support or resistance. And how do you know what significant volume is? Well, you need to know your stock. You need to know what you're trading. You need to know it inside and out. And when you do, then you could use those. So I hope that clears that up. I actually get some questions about that. So we're going to head over to the charts. We're going to look at some follow through from yesterday. We're kind of neutral to slightly open in the futures right now. So let's see what's going on. I'm going to be trailing profits on some good trades from yesterday. So you can see here's where we closed yesterday. Here's where the futures are now. September futures are going to be rolling this out to the next month soon. And you can see that we're not really down that much. But as far as some trades today, I actually want to start out with the trades that we had from yesterday, just to bring home the point of understanding how to game plan makes all the difference in the world. And just an unbelievably exciting day yesterday in the boot camp. If you were involved, it was really just a question of, do we get back in? Do we book profits? Either way, it was good. A lot of discussion yesterday about the average true range of the stock, which, by the way, watch the video that I did yesterday about profit-taking strategies. Just really a good example of when everything lines up, it's okay to go back in, dip your toes back in when everything is lining up. There's a difference between going back into a stock that reaches its average true range, that's not perfect, and you kind of hesitate because you think that's kind of it. And a stock, let's say, that's in a downtrend that has a big rally to the upside, so maybe you want to buy it or actively trade it just for that day, that's not perfect condition. So you would rely on the average true range a lot more to move up that trailing stop loss versus a condition like yesterday in Facebook, where everything and everyone was on the same side and punched through to new all-time highs. So congratulations to everybody in that stock, whether you scaled out, which actually we discussed it yesterday. I believe Jason asked the question, what would I be doing in this situation? And I said, when I start to feel that way, where I'm kind of getting antsy about it, especially if it's an active trade that has moved this far, this fast in my favor, I generally exit 70% of the trade. So I ring the register if I'm feeling that level of anxiety, quite honestly, or I feel like it's gone more than it normally does. And then I let the other 30% run. So I'm booking some, taking most of it off the table. And you can see actually right now it's trading a little bit lower, so not a bad decision. Yesterday we also had NEO, very similar situation where we've been planning this one for a couple of weeks. Finally hit our target, but didn't hit our target, came close to the target. And we talked yesterday, similar situation, do we get out, do we stay in? I was clear on this one. We were looking to hang out, just give it one more day. We were looking to sell a higher opening today, and it's opening a little bit lower today, so no big deal. That's a part of it. We're just managing a profitable trade right now. As far as the ideas of the day right now, we're looking at Abbott Labs. If you didn't read the news, the FDA approved and keeps giving glowing news stories about their COVID test. And you can see right now it's up 8.5%. So this is going to be active today, and you need to force it to meet your criteria. If you can't trade a stock that moves quickly like this, do the smart thing. Just step aside. If you can, absolutely. Very similar. We're looking at some earnings stocks last week. But I will say this. If you're thinking about trading this with options right now and buying call options, they're going to be expensive because of the attention on the stock right now. You might be able to afford them, but they're going to be expensive. So keep that in mind. Might not be the greatest idea to be looking to buy a call after the stock is up 9% and has all of this action on. Option market makers are smart. They're going to price those premiums high so they make money, not you. So be smart about that, but this is going to be in our list today. DraftKings is an interesting one. We kept waiting for this breakout, waiting for the breakout. Finally did punch through 38, but then closed on the lows. And this is a good example here of managing trades. There's actually news today about trading lower because of the NBA protests canceling games. So that's obviously affecting DraftKings revenue. So this is a good example here, regardless of the news, that it wasn't perfect order flow, but it was a perfect breakout, got through our level. But because it wasn't perfect, you would manage the share size properly, which means you're putting kind of out your first piece of the trade. Jesse Livermore called it a probe. You put out your probe, wait for the market to give you some feedback, and if it follows through, great. Then you look to add, assuming that there's room to go. If it doesn't, no big deal. You lose money on a smaller piece in a trade that was less than perfect. So if it's opening lower on you this morning, you only had a small piece because you were waiting for more feedback, and that's good trading. That's the smart way to be a trader. Next, we're looking at CRM, which had earnings and just absolutely shellacked the market yesterday, just shellacked into the upside, and just got amazing follow through. These stocks that are getting follow through after big gaps, after earnings, man, they have been just the golden goose lately. Target we'll take a look at in a second. So what are you looking to do here? I'm still looking to day trade the stock long. I'm not looking to initiate a new swing trade after the stock now has basically gone almost $80 in 2 days. So I love the stock long, manage your profits in that position. Obviously, Netflix is the other elephant that we were discussing yesterday. We had our levels that we were watching. You can actually see the level here. Once it took off, it was really just, again, a question of where are we looking for. We actually had 525 as the first area we're looking for, just completely obliterated that. And now, obviously, we're looking at the 560, 570 level. Again, very similar to everything we're looking at right now. The market's down a little bit, but these strong stocks that are opening lower, giving us an opportunity to look to be a buyer of these stocks. A stock that I've not traded that much, if at all, quite honestly, Big C. You can't ignore this move. I want to make this clear. I'm not looking to get involved in this stock. I like to have stocks a little bit more history. However, it has now made its way into my watch list where I'm going to start watching it every day to get a feel for how it trades. And then eventually, when it comes back down to earth and gives me a spot to manage risk, I'm going to start to look to trade this one again as well. We already covered Facebook. So Adobe is another one. Excuse me. ADBE is another one that we had in the list yesterday, but for some reason we just didn't trade it that actively. Full disclosure, we had so many other stocks that were unfolding in a big way. Adobe kind of just slipped off the radar yesterday for whatever reason, and that's fine. That happens. So we got a lower opening today. It's going to give us another chance to look to initiate a new trade today, and this will actually be a decent one. If we open lower, push lower, and find a spot to bid, this is going to be exciting because this is really the first day of the breakout in that direction. Tesla, again, in the news as far as being in our watch list. Look, I mean, I get a lot of people, what do I think of Tesla? It's at all-time highs. How do you not want to be a buyer of the stock? It's a question of, can you afford to sit through a pullback? This stock has now moved $700, almost $800 in the last 2 weeks. Yes, it's 100% along. Can you personally trade this stock and sit through a $250 decline if it pulls back for a day or two? Do you buy it at all-time highs? That's on you. Look, we're not talking about Penn and a $50 stock and it's easier to sit through. This is not a stock for everybody. Maybe wait for the stock split to happen. Maybe don't. But I want to make it clear, it's one thing to call out an idea. It's one thing to be in a stock or want to be in a stock. It's a completely other thing is, can you handle the risk associated with the potential pullback? If you're long from lower levels, awesome. Absolutely awesome. You're managing the trade right now. Is it a long? Yes, 100% it's a long. Where is the trade? Well, the trade was over here. The trade was over here after it had these 5 bullish gaps, 1, 2, 3, 4 bullish gaps, and then paused for 2 days. This was the entry. The entry is a lot less awesome at all-time highs to assume you're not going to have any risk of a pullback. So again, I want to try and make sure I'm pointing out, like, where are the better entries? The better entries are the ones you anticipate. A lot of people are chasing price and having these stocks pull back on them, and that kind of seems to be the theme of this month, or why am I always wrong in my trades? And it's because you're not anticipating them. This is clear as a bell. It gave you 2 days to enter this position before it took off again. So risk is a big part of looking at Tesla. Shop is one that has been out of our list for a while. Maybe you can see this on the weekly chart a little bit better. Look at this weekly chop fest. But yesterday it got interesting now. Yesterday it actually perked up, got near that 1120 level again, and I could justify starting a small position up to that 1120 level, but then getting a little more aggressive, obviously, if and when it punches through there. But again, another good example of trade management being reflected in what you're reading on the tape. It's a good trade because it's at or near, again, let's just give you the full picture, at or near all-time high. So that qualifies it as a pretty darn good idea, but it's still stuck in this window. Let it get out of this window, maybe work a little bit of a position up to that breakout level. If it doesn't give you feedback and it pulls back a little bit, it's a piece of it's your first probe. Again, using that terminology again. If it does follow through and kick through there, you're going to have a nice head start. So that's the right way to manage your trades. You get feedback. If it doesn't work out, it's less shares. You get feedback. If it does work out, you got the head start on a terrific trade. Home Depot is one that I want to touch on because this was actually a trade that we called out last week as a swing trade. It has now exceeded our target by punching through to all-time highs again. So now we're just managing profitable trades here. There's no new entry here. I want to make that clear. You don't want to chase price into all-time highs. It's already moved and gave us the perfect entry on a pullback after good earnings. Now it's just a question of managing the trade. DLTR and DG both have earnings today. We'll see how they unfold. Earnings this morning, but definitely should be in the watch list today. Zillow, sticking with that home stuff, at or near, again, I'm just going to keep pointing these out, at or near all-time highs. So again, these stocks at or near all-time highs, they're still telling a good picture. What is a little frustrating here is you see this and then you see this, and I can understand why that's frustrating, but it's really not frustrating because it's, again, very similar to what we just pointed out in Tesla. It's pausing now. Here's the move, bullish gap, pull back, gives you plenty of chance to get in. Nice momentum move to the upside, well bid, well bid, well bid, and now it's paused for 1, 2, 3, 4, 5 days. If it takes off again, you have no reason to say you missed it because it has now paused for 5 days. Use the probing strategy that we just discussed and Jesse Livermore gave us 80 years ago. Visa, again, and let's just go to MasterCard. We'll come back to Visa. Actually, we can stay here. This is a situation where it's an amazing, obvious order flow and momentum. You have, and again, just keep continuing to push this and drive it home. Here was the level. You punch through the level, you pause. So you had 5 or 6 days to get into the stock. Takes off again, and this is where traders will get into trouble. This is absolutely a long. It's not a new swing trade long because of how far it's come in the last 7 days. So you have to ask yourself, where is this going to be? Oh, 3 days from now, 4 days from now, probably lower. That's the next entry. So if you're in this now, you're managing profits. If you're looking to trade it, it's a great idea to look to piggyback the smart money, looking for the next trade to the long side. So we have some good trades that we're managing right now. We have some good strong stocks that are going to open lower this morning that are going to give us some new entries, and a few stocks that are sitting at all-time highs just pausing. Abbott Labs should be in your list today. Oh, Target. I didn't bring up Target. That's actually one that I want to make sure that we mention. Target exploded last week on good earnings, held that bullish gap, traded higher that whole day. Now it's almost a week of consolidation. So make sure Target is in your list today too. It will be in mine. Have a great day. Leave a comment. Leave some feedback if you have anything that you've traded successfully. Absolutely subscribe to the channel and definitely join me in the boot camp. It'll be the best investment you make this year. I'll speak to you soon.